Alrighty, folks, we're back to back to back to back to back. uh, yeah, we're just gonna jump right in. No wasting time. Let's get to business. SPDas, the trading floor is yours.
Okay, thank you, Igor, and hello and welcome back, everyone, to the New York session two for the day. And we've got indices to look up in this session, and let's get straight away started off with the euro, followed with the dollar index and gold, and then we'll touch base with the Dow and SPX 500. Also, VIX, we haven't seen VIX for a few sessions now. All right, so that's the Euro USD hourly chart flashing on your screens. And last session we had a fill in the blank here. That arrow has been filled up nicely by by the fifth wave of lesser degree. So it gives us a lot of confidence to believe that what we have plotted here is unless there's a change in degree, what we have plotted here is correct in terms of minute wave 1, 2, 3, expanded flat wave 4, that was also identified correct last week, and the fifth wave subdividing neatly in five waves again. So that that wave 1 is wave 1 of a minute degree looks complete now. As far as the Fibonacci extension goes, it is it is touched exactly. It doesn't normally happen that it touches exactly. It's always a bit up and down. So let's remove this now, all right, and let's keep the counts as it is. Trading point of view, uh, as suggested last session, short-term traders who we've been long from 250 at least. We are not even asking about the aggressive traders who went long uh, from the low around the 14th of Jan, but that was a systematic trade which we suggested long, some 250. Now we are 250 plus points up, and short-term traders should be taking profits here, and because markets are now expected to go for a break. Quite a few indicators are confirming. One is the fifth wave complete, Fibonacci targets hitting, uh, RSI bearish divergence also seen. So whether it's wave theory or it's Fibonacci or it's RSI, everyone is confirming that now bulls should be setting up nicely for taking a break here. Okay, so if you're an aggressive trader, you might want to trade both sides. Okay, but please remember, going short right now always will carry risk. But many traders they they do both sides once confirmation is received that prices are reversing. So at the moment, let's discuss both of the charts. One is the long-term projection, which is on the higher side, and then I'll also discuss what can be done if you want to go short aggressive. All right, but the first thing is the expected path from here. Positional traders need not do anything at all. It is just the beginning. Here's where prices are expected to terminate, and that's this price. If I look at the time, is converging around the Friday, 31st of Jan, whether it's going to go in 61 or just below that. All right, so uh, the expectations of the remaining 3 or 4 days of a sideways, not sideways, actually a corrective decline, ideally it should take a shape of zigzag or an expanded flat. We don't know as of now. but it should be either a zigzag or an expanded flat in the making. So that's so long-term traders towards the upside may also go for a break, just sit and relax. We've just booked some profits and let the markets breathe, and we'll get back again on the long side around 318, correct? All right. For aggressive traders, you might want to go short right now with a stop just above that high. Now, that high was printed around 32, correct? So it got to be at least 20 points above that. So let's say we sell around now, that is 17. We place our stop loss around 0550, and then we can leave the targets to 1.04 and 1.03. Right. For those who are really wanting to do aggressive by taking a calculated risk, the only way to place your stop loss is just above that high. I mean, that's the only way to trade. If we have done the calculation correct, then price won't go above 32 and reverse should be from here. Still, another third strategy is, okay, let prices break 454. That would be the first confirmation. And then when it pulls back, you can again go short with that would be a bit safer because markets have proved a price action, all right, and then you can safely place the stop just above 532. But overall, that is still a counter trend, all right. Okay, I think we've got enough trade strategies for euro, for for long term, for short term, for aggressive. Let's go back to the dollar index now. Okay, that blank has also been filled up. I'm going to move wave 5 a bit lower so that it aligns with the price action. There's no overlap. This is what we are now expecting. So 5 waves are complete. I'm going to get rid of the Fibonacci extension also because now we have a new boundary to be worked upon, and new targets will be set up for wave 3 decline, correct? So we've got wave 1, 2, 3, 4, and 5, and whether the third wave is extending or not, it's still a mystery. I'm going to find out after this session is done because you need to calculate points here, right? Third wave cannot be the smallest one out of 1, 3, and 5. But as per the RSI, the Fibonacci extensions, everything is confirming that wave 5 is complete at a larger degree now. We've got minute wave 1 here. We're looking for a minute wave 2 rally to unfold. Trading point of view, short-term traders might want to take profits, wait for another signal to go short again somewhere between 108.90 and 109.00. That would be the price. Long-term short traders who are positional short traders need not do anything at all. We are going to get one more entry very soon, probably in the next 3 or 4 days. It's not going to happen in another 24 hours. Okay, at least 3 days. At least 3 days. All right, and there's a logic why we are saying at least 3 days. We'll discuss when we can do the theory classes. All right, so that brings us to at least Thursday or Friday, possibly, and next Monday we are going to get another short call. So you might want to take a break in trading as well, for positional traders. For aggressive traders who want to play both sides, the most aggressive trade is to buy right now, stop just 20 pips below the low, which is 106.90. You might want to keep it 106.70 and buy right now and target around 108 and 109. A bit more safer side, but still aggressive. Allow prices to break that resistance around 107.70 and then a pullback then enter buying on the pullback. That should be around 107.22 somewhere, or 2030. Stop right below 106.90, and then target 108, 109. Right. So all three strategies in the dollar index must be clear now. Let's move on to gold. Gold, if you just followed what we discussed in the last session, I mean, it had just tested the backside of the trend line, and what a way to reverse, isn't it? That's just the beginning. Maybe if you've done things correct in the last session, and it looks like that you did the right thing by drawing the trend line and hitting the backside of the trend line neatly, all right. And the other trend line is also just about to break lower on the prices are beginning to cut loose on the south side. So today's fresh intraday low triggered at 45. We are looking for 35 to be taken out. Once it is taken out, it would be a good price confirmation in terms of a potential bearish reversal ahead. All right. So intraday shorts. If you are interested in the short-term traders, remember we took 70 shorts. Uh, I think in the London session we discussed to add shorts around the 70, 1 is to 1
Yep.
risk reward ratio, stop loss at 28.01, target 35, if you remember. If you want to do intraday, just say thank you very much and come out. Please remain flat,
Thank you very
or
much.
you might want to move the stop loss to break even and target 35. So that's no risk at all. That's a short-term trade strategy. A medium-term trade strategy or a positional trade strategy or traders need not do anything at all. We are going to hold positions taken from 78.80 mark, and let's keep it open. It's a long way to, it's a long journey to complete actually. We are just beginning to cut loose on the south side. Having said that, I'd like to quickly view what the story is being told on the daily chart in terms of candlestick patterns as well. Let's have a quick look. Uh-oh. I sometimes really like most of the years, I mean, beginning of the years, 8 years of analysis was heavily relying upon the trade signal before taking a trade. It's potential engulfing bearish in the making. Okay, no problems. So all good on the short side for now. No change at all. Back to bars again. That trades remain active, and we will look into it when we come back. Tokyo Sydney overlap just in a few hours from now. Now the big stories, a couple of stories actually.
Let's go.
As discussed, I'm going to take a while. The Dow Jones is quite clear in the sense that that was primary wave 4. Okay, I'm going to type in just primary wave 4 here. Not even primary wave 4, it is. Okay, so primary wave 4 was there. And then let's just do the minute 5 waves thereafter. So that is minute wave 1, minute wave 2. I'm going to just change the degree in a moment, please. Minute wave 3, 4, and 5. If it is done correct. Or I would say there is an alternate count possible, which I will discuss in a moment. Minute, let me turn this to minute first. Okay, so minute 4 and 5. Now, if that structure is an expanded flat 3, 3, and 5, then that minute wave 4 is going to shift slightly on the right hand side. In that case, prices should print a new high. If it does print a new high above 45 or 40, yes, 40, 45,000, then we would alternate the count. We'll have to readjust the counts here. So five waves are completing here on the left hand side, and then what we see on the right hand side is again an impulse wave one and two, almost complete, with that trend line being back tested as well last week. Now, if this trend line is done correct and the waves are all plotted correct, then that is the last push. I would like to zoom in. The recent push is the last push, which we call it the final kiss to the backside of trend line in our analysis language. All right, that could be the last one where the trend line is really back tested again, and it fiercely reverses low thereafter. All right, so short-term price action for the Dow Jones could be heavily on the south side if the counts are done correct. I mean, 42,000 is could be seen within quite sooner actually. Okay, so the structure in Dow Jones is quite clear, with prices refraining from printing a new high, and we would like to keep it as it is with medium-term targets poised around 40,000 and 37,000 respectively. All right. Now SPX, despite the fact that it went and print a new high, that could be the fifth wave actually. Remember what I was talking in Dow Jones as a possibility, because August was primary wave four. That is primary wave four. If you want me to do the entire chart, if you want to understand how the primary wave four comes, then just give me one minute. Okay, let's pick up the primary, not the primary, sorry, minor. So the minor waves begin from September, October 22, and I'll have to shift this to again minor just a moment. And then one, two, three, four, and five, the third wave extension, and then you have a minor wave four, and now do we have a minor wave five complete? It is quite possible, sir. All right, and if it is correctly done, just a moment, let me change the degree here. If we are right in identifying or plotting the five minor waves, then prices would reverse straight away and break that low, 5778, 5778, within no time. I mean, maybe a couple of days or so. And going forward, if we try and plot five waves within the minor fifth wave, maybe we can zoom out, sorry. It could be wave one, two, three all the way, or three there. It's a tricky scenario, either three here or there, and expanded flat wave four and five. So wave three either terminates here or it goes there. It's just about expanded flat wave four or a standard or a zigzag wave four, but it looks like an expanded flat. So we'll stick to this count of minute 5 with the third wave terminating slightly lower and then producing an expanded flat wave 4. Okay. For the count to hold, I mean, okay, prices have really they've reversed fiercely, but the first price they need to take out is wave 4 low of 1 lesser degree. That is around 5775. If 5775 is really it is taken out in this wave, then that will be the first price confirmation of a potential top in place. We will then find out an opportunity to go and find another wave two to enter on the short side. So the story is slightly different from the Dow, but overall, if you look at the larger degree picture, it is just about a wave difference. That's all. I mean, Dow Jones, we are projecting a potential wave two complete and three underway, while SPX 500 is just might be just beginning to produce wave one. So it's just lagging by one or a couple of waves actually, but the degree is the same. Okay, I think that's a tentative count again. We need to just wait for further price action. We are not suggesting any particular trade in SPX 500 like we did in Dow Jones, short around 44,000, stop 45, 500, 46,000, targeting 40 and 37 respectively. But SPX, we'll watch out for the price action here. Okay. Let's move on to the coins. I'm I told last session we were discussing let's have one more, a couple of more sessions before we commit or start committing. So prices have begun to move actually on the north side. Uh, a specific trade entry can be taken if you are really wanting to take that aggressive call, but I would still like to refrain from doing so at least for now because most of them have. Let me bring up the daily chart. That is a neat little wave corrective decline, goes without saying. I would still like to refrain because there you are, five waves from minute wave forum. That was minute wave four. Let me just recheck whether it is minute wave four or no, that is minor. So minute begins from here. I just need to push or start counting from the last low. Yeah, we got my minute wave one, two, three all the way, and then four. Now, by all means, this could be minute wave five, or it could be just wave one. But it could be both, right? But if it is wave five, then it's a very dicey scenario to commit on the long side right now. In fact, I would suggest a wait because wave five, almost a new low, not exactly the previous Fibonacci ratios projected, but just below that. And sometimes you really get trapped out of it. And there's nothing wrong in waiting for a high and then reversing because the risk reward ratio is really better in going short rather than buying right now. And you also see this thing. I mean, and this is something we need to really pay attention to. The RSI. Look at that RSI. I mean, way beyond the third wave, that high, it has been diverging, and it continues diverging to diverge. So personally, I would say with the chart story right now, it's good to remain sidelines. I'm not saying sell or buy, just remain sidelines until further price action clears up. Even if we miss the last leg, that's okay. I mean, we can always capitalize on the other side. All right. Ethereum, as far as the risk reward ratio is concerned, I mean, Ethereum could be still uh, considered, but problem is Ethereum is lagging behind by a complete wave, and which is a diverging scenario I was discussing with uh, Igor other side of the session. We need to really wait before committing in Ethereum as well, because that is not even, it has print a new high earlier. You never know, it is just beginning to cut loose on the south side. So just for the sake of one last high towards 4300, which we are buying just because of others are doing, it would not be advisable to do so right now. All right. So here's also a stay. And Ripple, we already got out. Ripple, we already got out. We were stopped out with the locked profits. But it's fine. Don't rush behind price action right now. Even if it rallies, it's okay. I mean, one wave. I am ready to let go one wave uh, because the opportunity is more on the downside from here. There's all RSI divergence, all RSI divergence, and we can always try and relook tomorrow London Sydney overlap, and we can always take a call. But at this point in time, refrain from committing on the long side. The risk reward ratio will not be good enough. And Solana, I'm quite convinced it has hit the target 284. It can go and hit 314 as well, but before we uh, commit on the long side, we need to really think whether it's worth doing it at this risk reward ratio or not. All right, maybe we can allow a small impulse wave and then a corrective wave and then enter, because I think that is 5 3, and then it's 1 2 3, that is wave 4, and maybe we are going to see one more leg lower. All right. So coins, we are not suggesting any trades for now, but others are pretty much in line with what was expected. Okay, so let's bring it a pause here. And once again, thank you for tuning in. Euro USD, absolute aggressive traders must be on right now on the short side. Let's see, we'll touch base again when we come back. Tokyo Sydney Open. All right, thank you
Amazing.
once again for joining in. And back to you, Igor. Thank you
Thank
very much.
thank you very much, SPDas. And
Okay.
I do want to, pardon me, I want to note something that's interesting is, if we're looking at wave counts and, it's like a time machine. Uh, what's really interesting is like we don't know what the fundamentals are as chartists. We're not looking at fundamentals. We're looking at charts. But
Yeah.
what I find really interesting is the correlation between the potential future wave counts and the fundamentals that roll out. The timing may not always be, the timing is different, but in terms of the counts and how fundamentals correlate, even though we don't know what those fundamentals are, it's interesting how time and time again these surprise fundamentals happen and they correlate with these wave counts. It's just so beautiful
Yeah.
to see, right?
Yeah, and even wonderful to see it happen just by watching this one screen of price versus time and doing the counts correct.
Yeah,
And we don't even know what is coming out of there in terms of news.
yeah, and like I'm just from I like to look at some of the mainstream news and all that and not even just mainstream news, but just from the fundamental side. and from building our LLMs, like we're digesting all that, right? So what's interesting is like, there's a lot of reports, almost $500 billion was wiped out from the cryptocurrency market. Um,
Oh,
what else was there? There's this new AI came out from China called DeepSeek, and it is now having an effect on SP 500 because the essentially institutions that are getting nervous that the the tech sector might be affected by technology coming from overseas, right? So it's interesting how the wave counts, the wave counts have been saying it. They don't know what it is, but they know that it's going to happen, right?
yeah,
I'll
and
just
since we are, I'd like to just interrupt 1 second.
yeah, yeah,
Since we are all talking the same, I think one more chart which should be worth watching is the VIX.
yeah, yeah.
Uh, and
You were saying
and
that, yeah.
so I forgot to bring
Oh,
up VIX.
geez,
Did you, if we go back just a few sessions back over the last week,
yeah,
okay, that was the count. I mean, if you have the videos, we can bring it up on the website as well.
yeah. We'll bring it up.
We
Yeah,
did wave one, and then we did wave two, if you remember, and wave three we had projected. Now look at that spike that
yeah,
VIX has given us just at the market open.
yeah. You
It's
literally
gapped
said
up.
that. Yeah,
It's amazing, and literally we were all talking that it's an opposite correlation with the SPX 500,
Mm,
and if VIX is pointing, VIX is heading towards 15, 56, 60 levels. Now, if VIX is telling us this story, then not a rocket science to understand where the SPX and Dow Jones are headed
yeah,
next.
yeah. You know,
To the
the,
south side.
yeah, it baffles my mind, but every time, like I'm, you know, and like for years and years, it's just like every time I'm still surprised by it, right?
Yeah, and this has happened time and again and over again. So
Yeah,
the conviction is there now that if, okay, we can go wrong in reading the chart. That happens every time. I mean, every now and then it happens. But if you are doing it correct, then we need not worry. Really need not worry about what's going outside.
yeah, yeah. It's everything is priced in. That's
Yeah, it's
yeah,
everything. Everything is priced in, brother.
yeah. Love it. Thanks so much, SPDas.
Thank you again. Goodbye.
Talk soon. Okay. Alrighty, folks. Uh, thanks for sticking around, and as always, huge pleasure to have you here. If you're watching and you're following along, please give us a like. If you're on X, repost, tell your trader friends. It'll really help us out. We'll be back again for Sydney Tokyo overlap with SPDas, doing the wave counts, and then we start the cycle all over again with London live, New York 1 with IT Trader, and New York 2 with SPDOS. The schedule's posted on X. We pinned the post. It's a new one. Um, all the information is there. If I'm missing any information, let me know. Uh, yeah, so just I just love watching these charts. I just love watching the markets, and I try and keep both heads where I got the fundamental head, but at the same time, the chartist head is the one that rules. That's from experience, and of course, SPDOS will tell you the same thing. And IT Trader, they don't even watch the fundamentals; they just watch the charts. It's just beautiful. Uh, all right, well, thanks again, and we'll see you catch you soon.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.